Hi, this is David Gemme coming to you live from our Gemme Group headquarters at Sotheby's International Realty in beautiful Lake Tahoe. Today, we have a special guest, Grant Staking from the Greenspan Company Adjusters International. Grant, that is a mouthful. Tell us what you do.
Thanks, David. It's great to be here. As Vice President at Greenspan Adjusters International, we help homeowners and business owners alike prepare, present, and negotiate insurance claims after they suffer a loss.
Fantastic. And Grant, why don't you kind of give us your, elevator speech of what you do as a profession?
Yeah, sure. In a nutshell, we are a private entity licensed by different state Department of Insurances, and we help homeowners and business owners alike prepare, present, and negotiate insurance claims after they suffer a large loss. So, for example, currently in the Napa area, handling a ton of wineries, high-end residential. I've done my fair share in the Tahoe Reno area, Cobblestone Cafe in Tahoe City, Norden Ski Ranch. So very familiar with the whole Tahoe Reno area as well.
Great. And what is the insurance company's perspective today on insuring homes in the Lake Tahoe region?
Yeah, it's a tough one. Insurance companies, a lot of them are trying to get out of California. We're not even talking about the different regulations that the Department of Insurance puts on them, but really it's the fire risk. Chubb, who does a lot of the high-end homes, I think $5 million plus, they're looking at different zip codes and just getting out of it. Privileged Underwriters is doing the same thing, Pure Insurance. So a lot of these carriers are trying to get out of California, but it's a slow transition because they love the premiums. They love being in California. That's where they make their most money, but they are definitely reevaluating the risk right now.
And what do you think that main risk is being caused by?
It's a combination of climate change. It's a combination of prescribed burnings that aren't or are happening. The biggest thing is, though, David, is the wind. When you have a fire, and even if our amazing firefighters are well funded, if there's 40 to 80 mile per hour winds, it just doesn't matter. I mean, you've seen it in Paradise. You saw it in the Dixie Fire, Santa Rosa back in 2017. These cities are just going up in flames within hours because there's nothing you can do about it.
No, there's nothing you can do about it. And the fire, when it starts growing, actually creates its own wind, right?
It does.
Those
Yeah,
updrafts
it creates its own climate.
Pulling in like even more and more. So if you already have an 80-mile-an-hour wind and the fire starts, it's actually about 120-mile wind where the fire is actually growing. So
yeah, and we see that in Yosemite right now in the Mariposa Grove. It's creating its own weather. Fortunately, though, it's not 40-mile-an-hour winds. Thank goodness it's not October or November right now.
Yeah, well, that's very true too. We had a fire that broke out across the lake yesterday in Nevada, and they basically had it out by sunset. And so I think that what the fire departments are doing now is they're understanding the importance, especially after, I think it was the one that was burned down in South Lake last year, but it burned all the way across 395 down towards Walker Lake. And I think what they realized is they could have stopped that fire. They went out, they let it burn about an acre, they kind of put it out, and then they went away. And that was a huge mistake. And I think everyone has realized that you just can't do that anymore.
Yeah.
Okay, so I have a whole list of questions here, so we're just going to kind of jump in and kind of hit them one at a time. What is the insurance company looking for to insure a home today? Like someone like Chubb in their multi-million-dollar properties, because that's what we represent. What are they looking for?
Yeah, they're really looking for, and by the way, a lot of these carriers are now requiring certain conditions within the policy for the homeowner to abide by to be properly insured by Chubb or a privileged underwriter. So they're looking for defensible space. They're looking for sprinkler system. They're looking for the type of materials your home is made up of that's more fire resistant. They also will actually, some of these carriers will have a company come in and spray fire retardant twice a year around your home. It's an invisible fire retardant. It has no scent. And that's becoming more attractive to especially higher end homes that can afford that, just to kind of create that barrier between it and the fire. But defensible space is becoming a requirement. The problem is as you know, in Lake Tahoe, there's a lot of different regulations. right? I mean,
Absolutely.
we go up to enjoy Tahoe because it's a beautiful place. And so they don't want you necessarily cutting down trees and creating defensible space on your property. However, it might be a requirement from the insurance company. So it's something to navigate.
Right. I had to go through that on my own house last year. And they came, because I actually wanted to not be part of the California Fair Plan with my house, because I just felt like if you wait in line at a DMV, to just register your car, I can only imagine what that experience is going to be with the state of California if you actually have your house burned down.
Yeah.
Right. And that's probably where you get paid a lot of money, is to go in and actually help these people, kind of navigate that process with them. Right.
Yeah.
Yeah. So, we actually had to go through, we had to put, fire retardant gutter screens in our gutters. We had to fix the shed that had a hole in it. We had to, do our defensible space around the house. And I ended up spending about almost $7,000 to fireproof and have this insurance company represent me and actually make them feel safe. And they told me that they're going to give me a review every year. And depending upon that review, they may or may not cancel me.
Right.
So I spent the money. Yeah, exactly. And my insurance rate has gone up since I bought the house. I was paying around $1,800 a month in insurance when I bought the house. It's now almost $6,000 a month. So that's how the premiums kind of adjusted in my own little case. And I just have a little tiny house in Tahoe City here. What can the homeowner do to increase their odds of being accepted by an insurance company from a paper standpoint? Like, we've gone through kind of like what they can do physically. Is there anything or any companies you suggest that they can actually kind of go through?
I mean, it's really difficult because, there's a company out there, it's called Wildfire Safety Solutions, and that may be who you use to kind of harden your home. I think the physical aspect of it is actually the most important, because the biggest risk right now in the Tahoe area is fire. Certainly looking, I would, and again, I don't recommend insurance companies or agents or brokers, but I would certainly look at a broker instead of a direct line like a State Farm or Farmers, only because there's more options. And when you go through a State Farm agent, they can get you a excess and surplus lines carrier, but the options are still limited. And most of the time they just throw you into Fair Plan anyway. And just so for your clients, Fair Plan, and here's the tough part, they only go up to $3 million.
Yeah.
So you could have a home that is $10 million in reconstruction costs. You could get a wrap policy, but I would try to stay away from Fair Plan and try to go with the Lloyd's of London, somebody in the excess and surplus lines market. But again, it's difficult.
Well, one of my favorite companies that I refer clients to all the time, if they've had military service or they're part of like the fire departments or anything else, is USSA.
Absolutely.
That company has been like just traditionally one of the best insurance companies we've seen across the board.
I agree with you, David. The problem is can you get it? Can you get the coverage up in Tahoe? But I will tell you, there are certain policies. USAA is one of them. They have a disaster clause in them. If your home burns down, they will give you 100% of your building limit up front, no questions asked. They'll give you 75% of your personal property. Now, what they won't do is, let's say your home's insured for $2 million with USAA, and you have a 50% extension on top of that. So you have another $1 million. They will not give you that $1 million. They'll only give you that first $2 million, and that the extension you have to fight for, which is where we come in. But they will, in a disaster, give you 100% up front. They won't give you the extension though.
Okay, so let's talk about that. Let's talk about fighting the insurance company in that instance. Like, what are you doing exactly? Because I don't even know what you do.
Yeah. So we help prepare, present, and negotiate insurance claims. And in order to fight the insurance company, you really have to have the right coverage. And so what I'm telling people is don't and so that starts with properly insuring your home. So what I'm telling folks is don't insure your home thinking that it's just going to be your home that burns down. The kitchen fire that spreads to the attic and it creates a headache. You have to, in this day and age, insure your home for if there's a declared disaster, like the Caldor fire, the CZU fire. Right. Because what ends up happening, David, is historically when a city goes up in flames, unfortunately, there's a demand surge, increased cost of construction. Historically, it's 37.5%. So you may be properly insured today, and tomorrow you're underinsured. So I always tell people, you know, if you should be insured for 600 a square, be insured for 750 a square, because you're going to need that extra percentage in there.
Well,
So
in my policy, it's a really interesting clause in the policy. They actually have a disaster clause in the policy that they actually bump up my average replacement cost per square foot due to the fact that materials and contractors and everyone else will be difficult to get in an area.
Yeah, you'll have an inflation guard. Sometimes it's 5 to 10%, but again, normally it's historically it's 37.5. And again, think about it like this. Let's say you renewed your policy early January of this year, 1/1/2022. We've had inflation now this year. You could potentially be underinsured right now, right? And so you have that inflation guard, but you have that extension on top. So, but what I would say is the way to fight the insurance company first is have the proper insurance, but then you have to go through the process of documenting everything, whether it's through a software system called Xactimate, which nobody's ever heard of until they've had a fire. And that's something we're experts in. You have to learn how to manipulate that software to get the numbers right in order to get a proper settlement from the insurance company. There's a lot that goes into it.
So what you would advise then is that people actually videotape their houses so that you can actually see what's in the house, videotape around the house, so you can see any of the other personal property that's around the house, see the condition of the house, et cetera else, because that can actually work against you, right? If you did something wrong.
Yeah, but potentially. So I'll give you a couple of examples. I'll try to be quick.
Okay.
Yes. Take pictures, videotape your house. Even with that, you still have to then write down everything you see and price it. And then you have to beat the insurance company at their depreciation game, because they typically just throw out 30 to 50% depreciation. So if you have a couch here in the family room and a living room, they're both 10 years old. But one's the couch everybody sits on, the other couches nobody sits on. The depreciation is different, but they'll depreciate them the same amount. And then you're leaving money on the table. So film everything, but then you have to price all the items. And that will take months and months and months. So we actually have our own pricing department and forensic recreation specialists to go through and catalog everything you had after the fact as well. So it's always good to get that up front. But just understand you will have to price all the items, and that's something that can be a big emotional toll on.
I bet,
clients.
especially when you're looking for jewelry and other things, and we actually in May and June this year, we sent out a letter to all of our clients asking them to increase their insurance this year.
Yeah, you got to
actually be proactive about that because of the insurance, inflation due to the real estate market being at an all-time high. And it was amazing. Just about every client called me when they received that and they said, hey, this is what I have as far as insurance. What should I be insured at? And I'm like, a lot of them had $350 a square foot replacement costs, which that's not going to get you anything in this market.
And it is so much more expensive to build in Tahoe than it is in Sacramento. Absolutely. You can't even hammer a nail past 4 o'clock in Lake Tahoe because of, right? So you understand. And then you have the winter months, it shortens the time for construction. So you might have a crew out there Monday through Thursday. Nobody wants to be there Friday. And so you're getting less days per week. Then winter comes. It may take you 2 or 3 years to rebuild in Tahoe. It took many people 3 years, even in Santa Rosa. So Tahoe, especially in that then you have to understand your loss of use coverage.
Yeah. Exactly, because that runs out fairly quickly, right?
It runs out. So the best thing for your clients, they should not have a dollar limit. They want something that's called actual loss sustained. It means the time limit might be 12 to 24 months. 24 is better, but there's not a dollar limit. It's based on market
actual loss sustained. I got to check
actual loss sustained, because if you have 200,000 in loss of use and your house could rent out for 6,000 a month, after 2 or maybe 3 years, you don't have money anymore. But if you have actual loss sustained, that 6,000 a month will carry you until the end of the project.
That's an incredible tip. Thank you so much for that. So is there a difference in California and Nevada? Because we represent both states, Gemme Group here. Is there a difference?
Well, when you're talking about right down the middle of Lake Tahoe, so let's say Incline Village to Tahoe City, not really. The cost of construction is about the same. And that's just because of geography. Are your contractors going to be local? Are they coming from Reno? Are they coming from Sacramento?
Yep.
The regulations put forth by the California Department of Insurance are different. So California one has the FAIR Plan, which is, pretty worthless, but it's if that's what you can get, that's what you get. Nevada does not have a FAIR Plan. And also Nevada can invoke appraisal immediately. So you can put forth an estimate. This is how much my contractor says it's going to cost to rebuild. And the insurance company will say, we're never going to that. We want to go to appraisal. And that may cost the homeowner $100,000 to go through that process. And they may get half of what the general contractor says it's going to be. So
wait, stop there. So the actual appraisal will cost the homeowner $100,000 or
potentially,
$100,000 in the
yeah,
insurance?
you got to have attorneys. You have to have. We try to stay away from appraisals and mediation and all of that. So you don't. Part of the strategy is you don't want some over the top estimate unless it's accurate, but you want to be in the ballpark so that the insurance company comes to play. If they get scared off and saying, there's no way we're paying this, we just, are going to look at market value and subtract the land value. Well, now as a homeowner, you're not going to be able to rebuild with what they declare is the correct amount. So you have to be careful with the number. And real quick, to go back to your other question about, you said it may hurt you filming or taking pictures.
Yeah.
I'll give you an example, David. If you're a collector, little tin men, I don't know. In most policies, they have a clause in there that says collectibles are capped at $1,000.
Okay.
So if you had $10,000 worth of collectibles,
sure,
and you say, and the insurance adjuster asks you, every question they ask you is for a reason. They say, hey, do you have any collectibles? And you say, oh yeah, and you talk about it. You'll get a letter a month later saying, hey, we realized you had $15,000 worth of collectibles, but right here on page 2, it says you only have a limit of 1,000. So we don't use the word collectibles. We say we had lots of many items. So having that documentation and submitting it, they may determine that you had collectibles. So a lot of it is about building the narrative. And again, that's why us getting involved early in the process helps shield you from those questions. We take those questions instead, and then we sit down with you and strategize on how best to answer them.
That's an incredible piece of advice. Thank you so much for that. I mean, I look at that as like, you've gone through the biggest loss of your life, and then you have to fight these huge corporations who don't want to pay you what they said they would, right?
Yeah, it's
and
like,
that
what
is
am
the
I paying
biggest
premium
toll
for?
on these poor families. I have talked to so many families up here, and just the very fact that they canceled. I have had my insurance canceled personally. Out of the 5 years I've owned this one house, 3 out of the 5 years they've canceled my policy. 3 out of the 5. I paid them on time. In fact, I pay them all at once. I pay it all in front. I don't do escrow. I don't do any of that stuff. I just pay it up front.
Right.
And even still, they cancel me. And it's a really bizarre situation from my standpoint, being in the industry, to be having to fight them already, right? Just to keep me on the policy, like I'm already fighting them. So that's great. That's great information. Okay, so let's just talk briefly. We have the uber luxury, which we know a lot of those guys too who are buying a $5 million home. If the home burnt down, they would actually have different resources to rebuild that house anyway, right? They have more money than the average human being, right? Yeah. So let's talk about the average human being and what they can do right now. Like a homeowner with a 2,500 square foot home, what should they expect to pay right now?
It depends on the quality of the home, obviously, but I mean, up there, you're looking at, I think, $600-700 minimum a month.
Yeah, I think that's about right. Yeah.
And then it goes up, right?
Yeah.
But again, you have to, analyze and take a step back and look at your own risk, right? I have a 2,500 square foot home. It could be a second home. It could be like regular everyday folks who are up there. It's their main home. Make sure it's properly insured. I mean, Tahoe right now, I think a minimum you should be at 600 a square. And again, we're not talking about land value.
Yeah.
Where it's just the structure. And some people will say that's way too high. But again, as I mentioned earlier, when I say 600 or 700 a square, I'm not talking about through the paradigm, the lens of I'm insuring my home. This is in case Incline Village goes down, or how Christmas Valley, almost went up during the Caldor fire. So you have to insure yourself based off of your area and the risk that is there.
That's correct. And then you couple that with the fact that, if something does happen in the neighborhood next to you, the, chance of cancellation is even higher, right?
Yeah.
Insurance companies are like,
Yeah.
we're out, which is stupid if you think about it, because everything's burnt at that point in time.
Yeah.
So the chances of it burning again are like not that high.
Yeah, I do think there is some positive to take from this. There are a lot of tech companies that are insurance companies, but they're really part of that tech insurance world, like a fintech, it's insurtech. And they have this new algorithm they live by, but they think they're going to be able to come into these tough markets and insure it for less and broaden their book of risk to diversify it. So while the Chubbs of the world are getting out, there are companies like Lemonade and other insurtech, carriers that are looking. And then you have the excess and surplus lines market. Just understand though, when you have a carrier that's an excess or surplus, like a Lloyd's of London, they are really in London. I've had claims in Tahoe where we may not hear anything from them for 3 months.
Oh my gosh.
And we submit, we document everything. And then all of a sudden they write us a letter saying we're reviewing it. And then they buy themselves another 3 months. They don't necessarily have to follow the insurance code because they're an excess and surplus lines carrier. We eventually get the money, but just understand, part of the risk you take living up where you live is it's a tough negotiation if you ever need it. But again, that's why we're here.
That's just horrible to me. Like it's horrible.
And we've been conditioned to try. Nationwide is on your side, right?
Yeah. Until they have to.
But then, yeah, exactly. Yeah. And like a good neighbor, State Farm is there.
Yeah.
When you have a claim, it's trauma inducing. You have memory loss. It's very emotional. And then when they give you your first initial payment, it feels violating and insulting.
Really?
Yeah, a lot of almost all. I have a client in Reno the other day. He's one of the GMs over at Camping World over in Reno. House burned down, and the adjusters from Texas and saying, "Here's $172,000." Now, after a 3-hour phone call with that adjuster, we're up to about $600,000 now, and we don't even have our preliminary estimate in. But again, it's building that narrative and understanding the policy. It's kind of like a piñata. You keep hitting it until all the money falls down. So I spent a lot of time with that adjuster on the phone and our team. So we've already brought them up. But again, if you don't know what you're doing, it's tough.
That's an incredible resource. And so the way I'm picturing what you do is the homeowners here and the lawyers are here and you're right in the middle. You're the guy who's keeping the lawyers out of the basically rebuild process. And you're the guy who's like, we're going to give it 100% effort right now to get this resolved. And then if this doesn't work, we're going to attorney. Yeah,
right. And we're level. I had a client, Mr. Borba. Yeah. He said, when we had Greenspan, it's like leveling the playing field. You have professionals against professionals. Look, if I was going to buy a waterfront property in Tahoe, and I'm a smart guy, I know how to negotiate it. Would you, if I was your friend, would you recommend me to do that on my own?
No.
I would come directly to you and say, help me through this process. Yes. What am I missing? You know what? In fact, do 98% of the work.
Yeah. Okay. So let's talk about that. Like, how do you get paid?
Yeah. So we have a modest fee. It's typically 10% of the overall settlement. Okay. We get our clients 40 to 75% more than what they get on their own. Just like this one in Reno the other day. I mean, I've already increased this client by over 100% and we're on day 5. So now we're going, now it's just going to keep going. But so basically 40 to 75%, that's how we get paid. 10% is typically the fee, and that comes out of the overall settlement. And again, what you get with that is a team of experts, myself, an executive adjuster. You get a building forensic estimator in-house. You get a personal property team in-house, a pricing department, and we're interfacing with the insurance company. And then what we're also doing, David, is we can go back and look at our data that we have from other wildfires. And we can see what Chubb or State Farm or any of the carriers did in 2017 or 2020. And we can say, wait a minute, you did this here, now you're not. we have a little issue with that. We have a large paper trail. We've handled over 55,000 claims in the last 76 years. So we have all that data stored, and we can go back to the insurance company and say, you're not playing by the rules you set a precedent for here. We expect that same here. So it makes it fun.
Yeah, that's absolutely incredible. I can't believe that you're so nice with everything that you have to deal with every day.
Ask my wife.
You're still married though. That's a good sign.
Maybe, yeah.
Maybe.
Married and kids, married and 3 kids. But yeah, I mean, it's a lot. And a lot of our employees, David, come from the insurance side of the world.
Right.
And we got tired of management saying, you can't, you have to depreciate it by this amount, or no, they had lath and plaster, but you're not going back in with lath and plaster. And saying, well, they have replacement cost value. Why aren't we even following the policies that are in our own, insurance, right? So,
right.
A lot of us come to this side, and nobody knows about us until they have a fire. A lot of insurance agents don't know, and that's why we're kind of branching out and looking into our network a little bit.
And are you specific to only fire, or do you have like flood cases and other things too?
We do everything. The only thing that we don't is crop. Crop's a federal program, and if it's not, like if it's a grape on the vine, it's different. If the grapes are on the vine or in process, then we get involved. We do a lot of agriculture, multifamily units. I don't know if you know Santana Row in San Jose. It's a big outdoor mall. It's like the Shields or in Reno, is it called? But a lot nicer. That burned down. And we handled that. We also handled the Twin Towers in the 93 bombing and the New York Port Authority after 9/11. So we do everything. Hurricanes, we've been in Puerto Rico, wind, hail, roof collapses, fires. So we do everything.
Okay, so let's talk about rebuilding versus cashing out after a fire. Talk on that point for me, just so that we can have some ideas.
Yeah, I'll try to give you an example with numbers, because that's what makes sense to everybody. So you could have a home in Tahoe that's 2,500 square feet that will sell for, let's say, I don't know, $2 million, $3 million, depending on where it is. What you can do is, if you get the replacement cost value high enough, where even after depreciation, you get your limits and you're insured for $1,000 a square, you're properly insured. Sure. You can take the 2.5 million or the 3 million, whatever you're insured for, and then say, you know what? Hey, David, I'm going to sell the lot. I'm instead of rebuilding, which will take 3 years. Right. There's a property right over there for sale for 3 million. So I'm going to take my 3 million. I'm going to pay off the mortgage. I'm going to sell my lot, which will then subsidize what I owed on the mortgage. You may then go buy a property with cash.
And that's totally legal. There's like
totally legal. And and this is what I tell people, real estate professionals like you. If you understand this process up front, there's a lot of opportunity, because after wildfire, there's a huge land grab. Right. And so if you understand that cash out opportunity, you are a huge resource for your clients. And you can say, I've learned this past week or whenever. You can actually cash out on X amount of money. I'll sell the lot. You may even buy it from them. Right. And then they go use that money and go buy another property. And now you're involved in that whole transaction.
Wait, I missed something there. You can actually buy your own lot from them?
Yeah, I mean, I'm saying you could buy the lot from the client.
Okay.
Say, I'll buy a lot.
Oh, I could buy the lot from my client. Got it. Okay.
So they just get that. But because there's a big land grab, there's a big land grab, and a lot of people that's attracted them. So, but if you didn't buy
the Angora fire, which was down in South Lake, right? There was a neighborhood decimated in there that had no lake views before that fire. And once that fire happened, now all those homes have lake views. So anything that was built there actually got a 25 to 30% appreciation bump, simply because it had a whole view of the lake now.
It's crazy, right? Yeah. So there's opportunities, certainly in real estate. But again, if you understand that cash out process. So if we were involved with one of your clients, their home burns down, hopefully not,
Yeah.
we would lay out the, multiple paths, rebuild, not rebuild, buying someplace else, rebuilding someplace else.
Yep.
And we would then keep you in the loop and understanding, okay, this is what the client wants to do. They want to buy a property. And as you know, the real estate game, you know it a whole lot better than me. What the Tahoe market and how to get into a home and purchase and leverage what you know, so they can take that insurance money and do that. But they're
We
able to
saw
do it a lot.
a huge influx of people after the fire in Sonoma up to Lake Tahoe.
Yeah.
And we saw many people relocate from Sonoma to Lake Tahoe during COVID as a result. They just wanted to stay here and they never left. And that was
Probably
one
some
of
of my
best
clients.
Yeah,
And
probably
I can
right.
now I can refer, hey, David, I got 10 guys who want to come up to Lake Tahoe.
Yes, and we're
Good
always
thing.
here we are always open to your referrals. So like,
Of
if you have
course.
people that need help, you just let us know, right? And we
Of
will
course.
definitely be referring back to, as just a side note of like what people search for on the internet when they're looking for a company like you. Give me some tips on that. Like, what would people like actually be typing in the search box to find you?
They would type in public adjuster. So
Okay.
our official title is public adjuster. Some people say private adjuster. We're not independents. Independent adjusters actually work for insurance companies.
Oh, okay.
So you have an insurance adjuster, you have an IA, which is an independent, or you have a public who serves the public. So I represent attorneys, I represent doctors, I represent real estate firms. It's always, hey, we need a public adjuster. So that's our official title.
And I'm just going to be naive here. I have never heard of that industry. So I'm so glad you contacted us. I'm so glad that you've contacted us and we can now be a resource for you and our clients if this ever happens to any of them.
Yeah, exactly.
Okay, so public adjusters, what they type in there, and would you type in fire next to it or just insurance after it?
Public, I mean, you would type in public adjusters, fire damage.
Right.
I had a fire, what do I do?
Right.
Sometimes you can go on Nextdoor.
Sure.
And things like that as well. But public adjuster, fire damage. And then, that's how I would look it up.
I have had so many takeaways from this conversation. I'm so grateful you called us and did this with us today. Do you have any final words?
I would say that be properly insured and always ask an expert for some advice. Look, David, we don't get involved in every claim.
Yeah.
And in fact, in many wildfires, people are underinsured. We still take the time to, whether it's hours or days, to meet with them, to, put forward a strategic plan for them. But we don't always get engaged with them with, let's say, an agreement. Being properly insured gives you the best chance once we get involved to maximize your claim. So talk to an expert. And do your research, look under the hood, do your due diligence, look up Yelp reviews, look up references. And I would also add, make sure they're part of NAPIA, which is the National Association for Public Insurance Adjusters.
NAPIA, NAPIA. Okay.
If they're not part of that, run away.
Got it. Okay, good to know. And so like these new companies and with the tech algorithms and all that stuff, they're all part of that?
Well, no, on the carrier side, that's totally different. On our end, as public adjusters,
the adjuster side. Okay.
Yeah, the adjuster side is the association. Because there are mom and pop public adjusting firms out there. They may do 10 fires a year and they don't have any in-house building experts. They don't have anybody in-house. They basically do what the insurance company does and they contract third parties in. And so those people are also, there's a code of conduct and ethics and how to carry yourself, just like you're probably part of different associations, being held to the highest standards with Sotheby's.
Yes.
So being part of NAPIA, that's where you want to be. And so being with Greenspan Adjusters, we are part of NAPIA. And we do a lot of education and outreach, which is kind of what we're doing today as well. So
yeah. Well, everyone, we have been talking to Grant Staking from Greenspan Adjusters International. He has just been a fabulous resource for us. And, we're going to put his contact information in the links down below. And we've also done 2 other videos that you'd be interested in. Also, we've done a video on defensible space, and we've done a video on basically the way to create fire prevention in your house. So we invite you both to take a look at this. We'd like to thank Grant for coming today. Grant, thank you.
Thanks for having me, David. We'll talk soon.
Sounds good. Thanks so much, and
Okay.
have a wonderful day.
All right, you too.